afternoon, everyone, or good morning for some of those of you on the East Coast, West Coast, who knows? But good morning, everyone, and welcome. I want to welcome all of you to the Share Series Company Spotlight. Today, I am delighted to have with me the CEO and CFO of Delta Apparel. Bob Humphreys has been the chairman of Delta Apparel since 2009 and has been CEO for over 10 years. Simone Walsh, the CFO of Delta Apparel, has been there for nearly a year now. And what a year it has been. For those of you who don't know, Delta Apparel is a vertically integrated apparel company that designs, manufactures, sources, and markets activewear and lifestyle apparel. Well, they're a leader in on-demand digital print and fulfillment using their DTG2Go proprietary technology and innovation to their supply chain of customers. There's two main divisions, and there's a lot to unpack beneath that. So why don't we start the conversation off with what is Delta Apparel, and then we'll go into some of the key topics. Bob, why don't you tell the audience a little bit about what is Delta Apparel today and what you see as the long-term vision? Thank you.
Well, thank you, Dana. Appreciate being with you today. So at the foundation, Delta Apparel is a vertically integrated supply chain partner with major brands and our own Salt Life business. As you mentioned, we operate in two segments. So Salt Life is a brand that we own and own the IP of and control all aspects of the business. It's grown from basically $3 or $4 million of revenue about 14 years ago when we started getting control of the company, to about a $65 million run rate today. We have truly a multi-channel distribution for Salt Life. We have now 20 retail doors that we operate. We have an e-commerce business, and then we have a nice wholesale business. So Salt Life is operating at its largest revenue rate in its history and its largest operating margins in its history too. So we're excited about that business and see lots of runway for that to continue to grow and build value for our shareholders. The other segment that we operate in, the Delta Group, is our vertical manufacturing platform that has a number of go-to-market strategies. The DTG2Go that you mentioned is our strategy that provides on-demand digital print and fulfillment capabilities to some of the largest, best-known brands in the world and a lot of e-commerce businesses. And then we have our global brands business that is just that. We make product and do fulfillment for the major activewear brands around the globe and ship to their end customers in many cases. And then we have our Delta Direct business, which is basically undecorated apparel that we're selling and shipping to the next person in the supply chain. And then we also have brand direct business where we use either brands that we own or private label for major retailers. So you add it all up, it's about a $500 million business today that we've been growing and operating for about 22 years as a public company.
Great. And Bob, when you think about this business, and Simone also for each of the divisions, where are the operating margins now? Where could they go? And what do you see as the drivers of improvement go forward?
Yeah, so kind of big picture, our Salt Life business has mid-teen operating margins. I believe our last quarter was about 15%, with a fully loaded cost in there. And then, our vertically integrated businesses have operating margins in the high single digits, and it's where we're operating today. And our DTG2Go business had operating margins in the mid to high teens a couple of years ago. We've been re-equipping that business with some new technology, so it's brought that down considerably to about a break-even operating margin as we work through that. But now we're past the investment, and we're building production and building productivity, and we'll have our best revenue quarter this quarter ever in DTG2Go for the September quarter, and we're starting to see the fruits of our work in that business and expect it to return to mid to high double digit or teen operating margins.
Great. With the current landscape and current environment, the topics that we hear about all the time, whether it's inflation, whether it is supply chain, whether it's inventory, where is Delta Apparel on each of these, and what do you see as the go forward?
Well, inflation is the thing that we've seen for the last, 18 months, 24 months, although we were mentioning it on our earnings call pre-pandemic that we were seeing inflationary pressures. Then we had a pandemic and things calmed down a little bit. And then, inflation was obviously turbocharged. So that's new to operating the business. It's been a long time since we've had that in this country. So I think that's been one of the big unknowns and makes it difficult to, have a comfort in your forward-looking thoughts on how these businesses are going to operate. I'd say from a supply chain, we've done very well all in all, and we are a vertically integrated supply chain. So we control much of our destiny, and we control that for, our customers as well. And so we've been relied upon. We've delivered a high quality, on time product with our partners. And I think that's really helped us grow our business. As far as inventory levels, that's been, I'd say, a whipsaw effect that, our manufacturing was closed longer than our production demand fell, post pandemic. And so until about 4 or 5 months ago, we've been working as hard as we could to make record levels of products to supply consumer demand. And then I would say in the last 3 or 4 months have gotten caught up with that. And then with some weakness, particularly at mass, chose to slow up our inventory production and our manufacturing run rates to manage overall inventory levels, and particularly what we still consider high cost raw materials in inventory.
Got it. And then have you taken price increases, and what's been the reaction?
So we have had price increases, again, kind of starting a little bit pre-pandemic, based on supply and demand. And then we've had a number of price increases, post-pandemic. And, the way that is easiest to understand that in Delta Apparel is for undecorated tees. It's the most commodity and, doesn't change as much from season to season. And so those prices are now up, over 20% from where they were, 4 or 5 quarters ago. And I would say to date have been digested in the marketplace reasonably well, much more so than I would have thought based on my prior experience in trying to raise prices in these types of products. So that has gone through the, supply chain and shown up at retail. And then, I think the question is then, where does that create demand destruction? As we've seen sometimes in the past. And I don't know that it has created demand destruction as much as consumers having to decide what to spend their money on. And so it's more basics than something, I don't have to buy today.
Got it. You've done some interesting partnerships lately with new customers, like what you're doing with Fanatics. Would you like to explain that and what the opportunity is?
Yeah, so as we were developing this new technology for digital print, we call it digital first, which for most experts is indistinguishable between a screen print and a digital print and some of the hybrid capabilities out there. We've had a long-term relationship with Fanatics on a lot of different points of business. They were a big digital print supplier themselves for their own customer base. And they saw what we were doing there in the very early stages and jumped in with us and provided a lot of expertise and definitions of what their consumers were expecting on digital print, garments. So we work with that and our equipment suppliers and our technology to manage those processes. And ultimately, are their domestic supplier on digital print today. And they keep moving more and more production to us. Again, I consider it a partnership. We've worked shoulder to shoulder on this. It's been really rewarding to us to see, how they measure success and what their consumers are looking for, and our ability to fulfill to that quality level and speed to market. They call it days to porch, and how long it takes the consumer to get that product. So because we have numerous print locations around the country, and we can send an order, we can almost ship it electronically and then print it as close to the consumer, and it takes time out of obviously delivering that to the end consumer, which is important to them and all consumers. We're expecting to order something and get it very quickly now.
Got it. And with the technology and what you're doing with Fanatics, I know you've also onboarded some other new customers too. How do you look at that piece of the business and the growth trajectory there?
Yeah. So what we see this is adding another whole book to the book. So the first book for digital printing and fulfillment was e-retailers that grew up over the last decade or so, where someone either had IP rights or they were supporting artists or what have you. But it was a complete and separate segment of business that people were buying things through e-commerce. And then with the pandemic, that changed and accelerated. But all along, we thought the real end game was with retailers and IP owners that they would want to eventually have a model that eliminated inventory for them, was faster to the consumer, and were able to offer a much wider array, of artwork and the IP that they had. So that has moved fast forward. And so what we're now seeing is people with the IP that they've developed sometimes over decades or more, hundreds of years, and they've accumulated. Now they can offer that to their customer. And then we're seeing retailers and other commerce sites offering product where their consumer can come on and get retail quality level product delivered directly to their door, packaged specifically for that brand holder. And now we're moving into where retailers are replenishing at the store level using digital print and ordering just what they need for the right location just in time.
Got it. Certainly very important today with just in time and seamless. As you think about the core customer, we've all heard about value end being a bit slower, upper and middle holding on. What are you seeing from the core customer, the end use? What are you seeing in terms of the mass merchants and their inventory adjustments they've been making?
Yeah. So one of the great barometers we get every day and every week is our Salt Life retail stores. And it's been an interesting trend to watch, starting early summer up through, really last week. And we saw June, a little bit softer, but really the last 6 or 8 weeks, we've had record sales, at the store level. And so I think we mentioned on our last call about $2 million of revenue for July. We actually exceeded that pretty substantially. So we're really encouraged at that consumer, and they're, probably more affluent than the average mass customer, but certainly they shop at mass as well. So, that's been encouraging. And then I would say at the mass on our more basic goods, that's where we have seen a slow up in demand.
And then Simone, given a pair of fresh eyes having been at the company now a little less than a year, as you think of the financial statements and the algorithms, what do you see as the opportunity?
Sure. So thank you, Dana. I think firstly that, we have a genuine vertically integrated supply chain. And so I think what's been really helpful to see is, as we've just discussed, the differences across the market and the fact that our customers look different in those different markets. And so we're very encouraged by the manufacturing expansion that we've nearly completed now. We've got those manufacturing efficiencies, and that output has been expanded about 10% over the last year in our facilities in Central America. So again, we nearshore that Central America model with supply chain partners looking to partner with us in Central America. We're very happy with where that is sitting. I think then when you look to DTG2Go, as Bob was discussing, we have locations across the country now. And so we have digital print equipment across 8 facilities, different types of equipment to be able to respond to our customers' needs and put that print closer to those customers as well. That time to porch is critical for some of our customers, and we're delighted that we've got our machinery and our digital first technology in place in numerous facilities now across the country, just getting closer to those customers. And then as we look to Salt Life, again, as you know, this time last year, we had 12 stores. We now have 20 retail stores open, and they are performing very well. We are pleased with that. We've also changed around on our e-commerce sites, our ability to also have product shipped to customers. When we saw that continued expansion of our wholesale business, we were servicing our wholesale customers and needed to look at how we distribute to our e-commerce customers to allow us to get more product to them. And so we're very encouraged that each of those omni-channel opportunities are available for the Salt Life customer to source our product. And we're certainly seeing them source in many different ways. So again, you've got accelerated growth with digital print, with DTG to go. You've got strength in our Salt Life stores. We're continuing to open the retail doors as well. And our manufacturing facilities in Central America have completed the expansion that we have taken place over the last 12, 18 months, really to continue to position us for growth.
And for our audience, do you manufacture anything in China, or is it all Central America?
So we manufacture in Central America. We certainly source some of our Salt Life products through Asia and across the supply chain. Bob, did you want to add anything further to that?
No, so it's a small part of our business of what we source, and even the Salt Life product, all the cotton rich tees, we make off of our supply chain. So it's a subset of the Salt Life product that we source in Asia.
Salt Life be? How many stores could you have? E-commerce versus stores? What do you see as the long-term opportunity?
So, we see it as an omnichannel business, and, long-term would like to think between our own stores and our e-commerce site, that would be over 50% of the business. It's not quite there today. But when you look at the success as we've gone, up the East Coast a bit and, spread our wings geographically, these stores are doing really well. So I would certainly think, in the next several years, the brand would certainly support 100 doors, and we're averaging about $1 million, $1.1 million per door in revenue. And, then, a growing e-commerce business, we see that following each other. I think truly the omni-channel model works for the right types of brands in the right areas. And then we've been very encouraged with our wholesale business. That was one of the biggest surprises at Salt Life this year, is the growth in our wholesale business as more retailers wanted the brand and it performed well for them.
Got it. And then on the business capacity, where are you in terms of capacity? What do you need to add? What's the capital needed to maintain the growth of that business?
For DTG to go?
Yes.
So what we've done this year is had a different type of digital print equipment installed now at 4 facilities across the country. So again, getting that geographic reach with the ability to have a closer time to porch experience for our customers and end consumers. We are continuing to look at that expansion, both in terms of a geographical footprint, as well as looking at how we are currently running our operations, the addition of further shifts to continue to enhance capacity there. So we see that business continuing to grow. We're going through financial planning at the moment, fine-tuning plans for next year to have a look at exactly what we will look to do over the next year and the next 3 years. More to come.
Got it. And the balance sheet, Simone, how is the balance sheet positioned?
So yes, we are positioned well. I think you would have seen over the last quarter, we renegotiated our loan amendment with Wells Fargo so that we have extended our term now, and the maturity is June 2027. We are continuing to take advantage of capital lease opportunities with some of our equipment as well. And I think, like many in the business at the moment, are taking a very close look at our inventory levels and continuing to look to get the balance right with production and inventory available for our consumers and customers.
Raw material prices. We know about the volatility of cotton. What percentage of your business is cotton, and where do we stand now in terms of cotton pricing?
So if you look at, the product we ship out in totality, it's probably 75% cotton by weight. There's some 100% polyesters, there's some blends, but, all in all, so we're a big user of cotton. Cotton has been volatile and remains volatile. The USDA on Friday put out a new forecast for the U.S. Harvested, acreage this crop year that's in the ground right now. It was a big reduction, and so that just adds more to the volatility, of cotton. So it's something where we used to think about it maybe weekly and every couple of weeks and deciding what our pricing strategy is, but now we think about it hourly in some cases, and just think about where cotton prices are, what are the drivers of that, what's the consumer reaction going to be. So certainly adds volatility to our business right now.
Yep. We're hearing that from everyone. And when you think about your business, activewear, basics, how much is fashion product? How much is core basics? I've always thought of you as more core basics. How do you envision it? Where you'd like it to go?
Yeah, so we think we are core basics, and the most fashion forward thing we do really, as a company, is design the Salt Life line. But even there is something for everybody. It's not changing the fashion world, maybe changing the interpretation of how you live the Salt Life and what have you. We have virtually no closeouts in that business. Everything we have made has sold, in worst case sells through one of our retail stores. And we get to make and collaborate with what we think are some of the best activewear brands on the globe and where their product is going. So we get to work with them shoulder to shoulder and learn and see from that. So we make some really fashion forward products for our customers. And do the packaging and the printing and sometimes shipping to the store level for them. But then if you look at our basic undecorated tee market that we sell day in and day out, that product is more upscale than it was 5 years ago, with finer fabrics and different makes, as our customers have demanded and consumers have demanded. But we're still a pretty basic business without a lot of fashion rips to it.
And when you think about some of the new customers and partnerships that you're taking on, like Fanatics, technology, capital spending, whether it's warehouse capacity, machinery, what does this mean for your capital spending requirements?
So you broke up for a little bit in that. So if I heard you right, is how we allocate our capital spending. And I would say it's evolved over the years. Sometimes we'll have a big initiative on a manufacturing facility or a distribution facility. I think most of that's in pretty good shape. We've invested a lot. We're always looking for more efficiencies in distribution, whether that's geographically, and our population in this country is moving, and so sometimes we need to move with that. But then I would say the thing that's additional is the demand that has been for our digital print business and expansion there. So we've spent in the last 2 or 3 years, a higher percentage of our capital, on our digital print platform. And then we're always spending on IT. It's kind of the silent thing that ends up taking up a lot of money in us and all these businesses today, whether it's new websites or new technology, eliminating non-value adding steps, advanced ship notices, on and on and on. Our CapEx on the IT front continues to expand.
Got it. And then we're asking all the companies in this economic environment, whether we're in a soft landing or going into recession, how has the business performed in recessions before, and how are you prepared now if it's an extended slowdown?
So, Delta Apparel has performed very well, in slower economic times. And, we think back about, all the things that we've been through, 9/11, the financial meltdown, several little recessions along the way, a lot of new regulatory requirements, from the SEC standpoint. So, we've managed through all those. Looking back, some of them look pretty daunting, but the good news is the consumers buy, basic tees and feel good apparel, their favorite cartoon character or what have you in recessionary times. And I think the outlier this time, yet to be determined is a economic slowdown with high inflation. And so, that's a new lever out there that we'll just have to see how it impacts the business.
Got it. And let's say it's a year from now, it's August 15th of 2023. Bob, Simone, what are we going to be talking about in regards to Delta Apparel?
Well, from my standpoint, I think this big movement closer to the consumer. And so it varies in our business. Obviously, Salt Life speaks for itself, but I think this whole digital print, revolution that's going on in our minds anyway, is going to continue to change things. And, Dana, you've been doing this a long time. I've been doing it. Years ago, we talked about getting time out of the supply chain, and we were trying to take months out, and maybe we cut that supply chain from 6 months to 4 months, maybe 3 months. And now we're talking to our customers about cutting it all the way to the consumer in 2 or 3 days. And so it's a huge intellectual leap forward. People got to get their minds around that. But this whole idea that you got to have all these warehouses, filled up with printed garments to service your customer will be evolving. And I think that will gain momentum, and next year will be a little bit more. I think we'll look back 10 years from now and see, it was a tipping point in a lot of how basic, embellished garments get to the end consumer.
And I would echo that sentiment. I think that if you think about where our manufacturing is in Central America and in Mexico, we're very well positioned to take advantage of more people being interested, being nearer and nearer shored to the United States. I think we also differentiate ourselves with that genuine vertically integrated supply chain. So you are going to see at DTG to go, for example, we are able to use our Delta blanks in that, removing another step from the supply chain, ultimately getting product to the consumers and our customers faster. And I'll be excited to be talking as well about where Salt Life is positioned, further expansion, geographic expansion, and referencing how our customers are really using that omni-channel to purchase their t-shirts when they're on holiday and when they go back home, sitting on the computer with our e-commerce site, fulfilling their needs that way as well.
Terrific. Well, Bob, Simone, I want to thank you so very much for joining us here today. Greatly enjoyed hearing the story and the path for the future with digital print, with Salt Life, and the opportunities with new partnerships. I want to thank all of you for listening today. I hope everyone stays safe and healthy and enjoys the rest of the summer. Bob, Simone, thank you very much for sharing the growth story of Delta. Thank you, everyone. Bye.
Thanks for having us. Thanks.
Take care. Bye.